Well, hello everyone. Welcome to Trading a Smaller Account and welcome to the last day of the trading week. It's been an up day in the market so far today. It's been an up week in the market. So the bulls are smiling and the bears are kind of licking their wounds. And does this mean, this downtrend is over? Well, maybe, but not necessarily. And, what do we do with that? And what lessons can we take forward with us? Today, I want to talk about trading with discipline and having a plan and following your plan. And you may say, like boring. Well, you know what? The fun is in the fundamentals, to quote a line from a really old movie. But, the fun is in the fundamentals, and consistency and discipline can set you free, right? And so we're going to talk about how that looks and how it looks when we aren't consistent and discipline and what the costs might be. And we're going to look at that in the context of reviewing some example trades that we've placed and how we've either managed or not managed them according to plan. And then we're going to place some new trades. So I'm up on my soapbox today, guys. So be ready. My name is Barbara Armstrong. I am a coach with Charles Schwab. And if you'd like to come out to the woodshed with me today, I'm going to give us all a little bit of a thrashing, namely myself. But, with the idea of when we make a mistake, what lessons can we learn from it? Okay, so if you are not following us on Twitter, I encourage you to do so. We have got Mr. Brett Crowther in the chat with us today. He is a fellow coach and actually a manager on our team. And so if you've got questions, please don't hesitate to ask. And between Brett and I, we should have answers for you. I want to welcome John and Chuck and Rocky Raccoon. I didn't realize Rocky Raccoon was, part of the lyrics of a Beatles song, and somebody just played it for me. And, so that really brightened up my day. So to Rocky and Sia and loves to invest in travel, I love your handle and I love the sentiment behind it. Backroad Bob and the rest of the gang, thank you all for being here. It's great to have you helping bring this, great energy to this class where we meet every Monday and Friday at high noon Eastern. And then on Wednesdays, Trading Price Patterns, I treat as a companion class to that. And that one, I believe we meet at 1 o'clock Eastern for that. Okay. So know that options carry a high level of risk and aren't suitable for all investors. We do a lot of options trades in this intermediate level class. Today, we're going to mix things up a bit. We're going to do a couple of stock trades as well. And all of the example trades we do are on the Paper Money software application on the Thinkorswim desktop platform, which is a brilliant place to learn and hone your skills and make sure you understand your plan and understand the mechanics of how to place trades on the platform. Know that there are some nuances and differences. One is that short option positions will never be assigned early in Paper Money. That can happen in a live account. Have I seen it? You bet your sweet Bippy I have. And the first time it kind of freaked me out because it was on a short put vertical trade. And, it's like, take a deep breath. So, if you end up having that happen to you, if we've discussed it in class, which we do, then you'll know what to do and what your choices or options are. So we're going to have a very quick look at the markets. At the market open, Kevin Horner, today it was James Boyd, who typically partners with Kevin Horner on Friday, giving an overview of the markets. And if you haven't added that to your viewing curriculum, you may want to check that out because they do a great job. Now, Friday, they talk about ETFs, so you have to be there live because the archives are not available. We're going to manage some existing trades, and then we're going to place some new example trades. So everybody's sleeves rolled up. Are we ready? We're ready. Okay. Well, here we go. So we started the year, actually this year, with 25,000, our max position size, 5,000, our max risk per trade, $500. And our focus is on a short to intermediate term time frame, depending on what's happening with the market in general and with particular stocks. We're trading either bullishly or bearishly, but typically with a shorter term view. Okay. So let's get out and have a look at the platform. So when we look at our S&P 500, and I'm going to change this to our sector indices, and we'll come back to that in a moment. But at one point, we were down like over 21% on the S&P 500. We've come, a fair ways back. So, we had this pretty significant downfall, and now we're seeing, some higher highs and higher lows. What might the next level be that we want to see this come back above for this uptrend to continue? Maybe above this 57.80 level, which kind of coincides with our 200-day moving average. But today, up 1.6%, gapped up on the open yesterday and today. And today continuing to move to the upside. Thus far, it is a live candle. So, who knows where we'll be, at the end of the day. With the NASDAQ, I mean, we were down even more on the NASDAQ. If we come from, year up, I think it was closer to 25%. It was a whole lot of pain, right? 25%. And again, we're, working our way back, seeing now, higher lows, higher highs. And this is, playing kiss and tell right now with the 200-day moving average, which again is pretty close to what some might consider to be a potential resistance level around that 20,300-ish mark. But the 200-day moving average, a pretty significant marker also. But, bullish, 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 bullish. So, the bulls are kind of doing the happy dance, and Chicken Little is, going back into the barn, or so one would say. Now, is she there for good? Who knows? And the Dow, similar chart, right? Similar chart. And when we look at the VIX, it's continuing to fall, now down to 22, and I keep adjusting my line. So if I activate this and bring it down to about where it is here, and we, look at a 1-year chart on this, it's still at the higher end of the range. But, for the longest time, for the last few weeks, I've been saying, we've only hit this once, twice, 3, 4 times in the last year. We're now, and is this old resistance becoming new support? Well, who knows? But we're still at the higher end of the range of where volatility has been, but it's come down pretty dramatically from where it was, here at the beginning of April. Okay. So what about sectors? When we look at sectors, which sectors have been leading? Well, consumer discretionary has been, over the last 3 months, still in last place, followed by communications. But, and consumer staples was leading the pack, and this is over the last 3 months, followed by utilities. So, these tend to do well when there's a lot of uncertainty in the market, or when we get into recessionary periods. People are looking for things that are less volatile so that they're not eating Tums by the handful. But now we see over the last 4 weeks, technology and communications have kind of, worked their way back to the top. And we can see, this looks pretty similar to the NASDAQ chart, doesn't it? And probably because almost half of the NASDAQ is comprised of tech stocks. If we come to visualize, here's, well, that's the S&P 500. And, it's a pretty heavy hitter, this sector, right, in the S&P 500. But here's our NASDAQ. And this is how big a piece technology is in it. Let me just grab my drawing tool here. Oops. That was from yesterday's after the close. It's maybe not half, but it's a big chunk. And then we've got communications, which is another big chunk, right? And consumer discretionary. So there's how much those 3 sectors comprise. And then you've got, another 8 sectors that make up the rest. And there are no financials. You'll see there are no financials in the NASDAQ at all. Okay. So, that's why it makes sense that these charts, look so similar. Somebody saying, that looks pretty. Yeah, it's like the sun has come out, right? Cue the theme song from Annie. Yeah, so tech is certainly coming back around the corner, and so is communications and industrial. So we're seeing, a lot of diagonal resistance breakouts. And if we're seeing this in sectors, on the sectors, might we also be seeing this, in individual stocks? It's kind of like the pattern du jour. So there we go. And now Staples has slipped to fourth place from first. And so that can help us inform maybe where we want to look for some of these things, for some opportunities, right? But one of the things I wanted to talk about today was discipline and consistency. And some of you guys were, trying to poke me on this. For example, we placed a couple of trades in the last week or so. So one, and if we come to our monitor tab, we have 2 trades that we got out of today that hit either targets or exits. So the first one was Apple. And when we look at Apple, oops, I can type honest. I've got another little thing here. Let me come back. Okay, so with Apple, we can close this down. So we did this vertical on the 23rd. And let me just make this fewer days so we're getting rid of the clutter. So we did a short put vertical on the 23rd, which was last Wednesday. That we did a short call vertical because we were bearish, and it hit our target, and we exited that today, the day after earnings. And this is one where if I bring up Apple, typically in our example trading plan, we don't trade this over earnings. And so this was something that we don't typically do, and this time it worked in our favor. But if we were really disciplined about following our rules, we would not have placed that trade. But one of the reasons, and we may have discussed this, is that often, even if Apple has a really fantastic earnings report, the stock will initially go down, and it did. And so this one worked out in our favor. And, if we want to run the numbers on this, if we come back and we look at this, we entered the trade and received a credit of $80, and we did 3 contracts. How much were we risking per contract? Well, we were risking $2.50 minus the 80, right? Right. Let me just pull up my drawing tool here. And we haven't done this, a lot lately, gone through these numbers. So we sold it for 80. We bought it back for 11, which was, the plan was to buy it back for 80% of max gain. So we got a little more than that. So that was a gain of $69 times 3. And I'm not taking commissions into account, and that would have knocked our number down a bit, or transaction fees. So we ended up with $207. That's a base hit. And if you can stack up enough of those, it starts to look and smell like real money, right? If you're looking to generate income for your account or whatever it is. Now, what was our return on risk on this? Well, how much were we risking? Well, we were risking that $250 minus the 80. So we were risking $1.70 a share, or $170 a contract. And what did we end up making? 69. And that was about a 40% return. And for a short vertical, that's high. Often it's somewhere between 15 and 40%. And so we were at the high end on this. But this is one of those that worked out. Now, somebody asked me about Marvell, because we placed a trade on Marvell on Monday, and we did a 1 ATR target on that. And we got out of that today. It hit our exit, not our target. And so we lost money on that. How much money did we lose? Okay, let's figure it out. So we lost $2.32 per contract, and we only did one contract because we were risking. How much could we have lost? Well, we could have lost this entire amount, right? The entire $5. So if we take 232, what percentage did we lose? If I take 232, we lost about 46%, not quite half. So it was, we lost 46%, but we could have lost 500. And so we got out. And so, is this, are we okay with this? And to this, I say no. And it's not because it's a loss. My problem isn't that we lost money. My problem is that we didn't follow our rules. And what are the rules with a 1 ATR trade? And you guys, again, somebody prompted me to do this on Wednesday, and I just didn't get to it. So let's go and look at that. So when we look at our chart, and we're coming over to Marvell now. So we placed this trade, this stock had been falling. And so if we look at, the trade, and when we placed it, this may have been, down, like below. So I don't know exactly what this candle looked like. So does it look like it's bouncing off a resistance level? Yes. So is the entry still valid? Yeah. Here was our target. Here was our exit. But the rule is, at the end of the next day, if it doesn't come down and hit the target, what do? We move our stop. We move our stop to where? Well, it depends on the price of the stock. So if the price of the stock is over 100, we move it to $1 above that close. And so our close on that day was 59.75. So we would have moved our stop up to here. This was the day we placed the trade. So we would have moved the stop to here. And we wouldn't have been stopped out because the next day it gapped down and then rallied. So we would have moved our stop up a little bit more. And so our stop on the first day would have been adjusted to 60.25. So that would have been end of day Tuesday or Wednesday. On Wednesday, we would have adjusted that. Then at the end of the day, Wednesday, if we were following our rules, we would have adjusted the stop to 58.94. And that would have meant that when we opened yesterday, we would have been out of that trade. Now, I didn't go back. I'm not like, what's done is done. So we would have still ended up out of the trade, but we would have lost less. And losing less sounds appealing. And is it just like the luck of the draw? No. This is not a game we are playing. And the reason that I'm saying this is because it's so important to have discipline, to have a plan. And, I've created an example trading plan for this strategy, and then to perish the thought, follow it. And I did not do that. And it cost us. And so, what do we say? Oh, I was busy, excuses. Like, I haven't done laundry in 2 weeks. You know what? And what does that do? It just makes a more crowded laundry basket. I don't have to show up here at work the next day, naked or dirty because my clothes aren't clean. I have lots of clothing, but if I, neglect to manage my trading business, and if I want it to pay me like a business, I need to treat it like a business, then this is a discipline, I don't want to neglect. And so when you come to these webcasts, I mean, we can learn from the mistakes we make together, or we can continue to make them. And this is one of the reasons that our account is where it is so far this year, because the most successful year we've had, and I've been teaching this for about 7 years now, 6 or 7 years, I don't know, it's been many years, at least 5, was last year. But last year was an extraordinary year. The second most a profitable year for us, and last year was just over 100%. Which is extraordinary. And these are example accounts and example trades. And, that isn't to say that you would have had exactly the same results in a live account. But 3 years ago or so, when the market really tanked, was our second most successful year. And so it wasn't because the market was going down that this account is down. It's because we haven't traded with discipline, because I've been here and gone a lot. And so I haven't been paying as much attention, and not paying attention can be expensive. So I just want to remind you that if you want something to pay you like a business, you have to treat it like a business, and how our business is run with discipline. If you show up at Starbucks tomorrow and it's a beautiful sunny day, you are not going to see a closed out enjoying the sun. If that store is open 7 days a week, they're going to be open 7 days a week. And when you go in and order a cappuccino, they're not going to say, I just decided to make it a little differently today. No, they have a recipe and they follow it. And so, there was a coach that I really adored years ago, and he said, like, have a plan and follow it until you know kind of when to break the plan. And so, like, does that make any sense? Well, let's say in this example here, that on this day, instead of coming down here, it had come down maybe to here and then started to rally. Might we have said, hey, close enough, let's take the money and run? Absolutely. And so we can adjust our target, and maybe that's a rule we can play with, but maybe a rule that we don't play with is position sizing. And we don't break our position sizing rule, because, we could be down significantly more if we weren't as disciplined as we have been about position sizing appropriately. Okay. So that's that. And, I don't want to clobber that to death, but on the same day that we placed the trade on Marvel, we also placed a trade on Crocs. And so let's go look at that. Because we should have been adjusting our stop on this one also. So we placed this trade on Monday. Here's our target. This has been trading in a range after, a Humpty Dumpty big fall. And then it came up here and looked like, geez, it doesn't look like it's going to get above the 30-day. Maybe it'll come back down and bounce again. So it came back down. But, what should we have done? At this end of this day, we should have adjusted our stop. And then kind of the high here on this day, 96.56. So we would have adjusted our stop to what? 97.06? Or if we added $1, 97.56. But if it's under 100 and you say, I'm going to adjust it by 50 cents, that would be 97.06. And then the next day, did it hit 97.06? Nope. Did it hit it the next day? Nope. Did it hit it today? Yeah. And so this would say, we should be out of this trade, because if we had adjusted our stop according to our plan, even if you'd said, well, it's close to, 100, let's adjust it by $1. Well, okay. If we adjusted it based on this candle to, 96.56, 97.56, we're at 97.06 right now. And the high today was 97.66. So, if we make our stop 97.56, we've only got 40 cents to go. So we're going to go in here and I'll show you how to adjust this stop. If you want it to show on your chart, We're going to make this 97.56. So now we're hovering right there. And if it goes up a little, we're out. So we're going to come to the monitor tab. We're going to come to activities and positions. We're going to come to our working orders. I'm going to organize them alphabetically. We're going to come to Crocs. 89. And we're going to make this, that's our target. So it's not that one, just a sec. I'm going to come down here to cancel. We're going to cancel and replace this order. And then I'm going to come to the sprocket, which brings up, and this was 103.80. We're now going to make this 97.56. And this is where, you know, sometimes we can get emotional about things. Not that I would ever do that, you know, but you know, this helps us take the emotion out of it. This is our rule. This is our plan, and we're just following it. And if this goes above 97.56, it's at 97.15 right now, we are out. Why? Because that's our rule. And this is 1 ATR, our adjusted target. And if it doesn't hit that on today, then we're going to look at it again on Monday. Okay. Okay. So somebody is saying, yeah, I've been kicking myself the last couple of days. You know, like, yeah. And you know what? If we had bearish trades on, you just have to, you know, follow your plan, right? And sometimes things don't go the way you were hoping. And this is why we aren't using hope as a strategy, because if we then just start hoping it's going to go back the other way, that is often not as effective a plan as we might like to see. Okay, so we're going to come now and look at some new possibilities, and Google is one of them. And so, you know, go ahead and type into the chat. And this isn't a recommendation that you use this particular search engine over another, but I think many of us have potentially used this search engine. And in fact, it's become part of our language. And this isn't a new thing. You know, like if you need to look something up, people don't say, you know, people will say like, hey, just a sec, I'll Google it. It's become part of our language. And so we have a stock that, you know, has hit some troubled times, shall we say. But, you know, it's now we're looking at a low, a higher low, a higher low. We've got a diagonal resistance breakout. It crossed the river. It came back to test the ice, and it's continuing to move to the upside. And one of the things that we may notice, if we come and look at this communication services stock, which has been, you know, pretty strong, right? It's now at the top of the pack for the last month. Let me come back to Google. But, you know, and we may want to do some more research on this. And I'm looking at this because we're looking at buying shares, but the sales per share has been kind of steadily going up for the last 5 years. Our earnings per share up 27.9% last year. And just because this has happened in the past doesn't mean it's going to continue to happen in the future. So we want to be aware of that. But if we come down here, I want to just kind of draw your eye to this price earnings number. And again, in this class, we do a lot of shorter term trades, but the 5-year average for our PE ratio, which is the amount you have to have invested to earn $1 of income, over the last 5 years, that average has been 23.226. It's right now at 17.2, which some might consider to be kind of favorable. And the trend is moving back to the upside. Yeah, so Jay is saying, yes, Google is both a noun and a verb in his world. And yeah, in mine as well. It's a company, it's a verb. Yeah. Yeah. So could we just buy some shares? We have $15,000 sitting in cash. You know, if you consider every dollar to be a little employee, you know, you've got 14,000 sitting there twiddling their thumbs at the moment. And so, what's our max position size? 5,000. Okay. So could we add our little calculator here? I can get rid of these. We're going to say if we can invest $5,000, and how much are these shares? 164. So you might say, well, we couldn't buy enough to make it worth our while. Let's just round up to 165. We could buy 30 shares. And so if we bought 30 shares, where might we put an exit? Well, we might say, hey, if it comes back below this 30-day moving, this diagonal resistance line, let's put it there. Or you could say, well, this 30-day moving average seemed to be acting as a bit of a ceiling. Now it could be, it's bounced off this 30-day once. Maybe it could be acting as a floor. So we could look at this candle 2 days ago. The low was 155.40 and say, okay, I'm going to take my 30 shares, and I'm going to put a stop. If I take that 155 times 0.97, I'm going to put a stop at 150.35. So if I'm paying 164 to get in, how much am I risking? About $11 a share. So if I'm risking $11 a share and it's 33 shares, is that going to be less than 500? $11 a share times 30 shares. It's about 330. So now, is there a guarantee I'd get out at exactly the price requested? No, we've seen, this stock both gap up and gap down. And so we could end up at a lower amount than what we're expecting. So that's a possibility. So we're going to come to the trade tab. We're going to look at buying custom with a stop. How much? Not 100. We're going to buy 30. And then I'm going to take my little firecracker and turn it into a paper clip. And then if I click anywhere on this line, it will even up the quantities. And we're going to put our stop in at 150.35. Now, could we put in a target? We could. Or could we just track it? We could do that too. So I'm going to come to confirm. And we could just put this in as a growth stock and say, hey, as long as it keeps going up, I'm okay with continuing to own it. Now, if you wanted to put in a target, where might that be? Well, you could say, hey, our previous high here was at 207. So we could put in an alert at, say, 205 and say, hey, maybe if it goes above this 205, maybe we consider exiting the position, consider selling our shares. And, you don't have to worry about your language, your grammar, or anything in here. This is just a note from you to you. Consider selling the shares. Consider exiting our position. And we created that. And then it'll be texted to you or emailed to you, however you set it up. Okay. Okay. So there's Google. Now, if that hasn't filled, and we'll give it a couple of minutes, and, if I go by time placed, we can see, it's like, oh, we put in 164.23, it's gone up a few pennies. So if you really want to be sure this is filled, because you're going to place this trade and then you're going to go out and golf or go get groceries or maybe do laundry. Come over to my house and help me with my laundry. Yeah. So, if you just want to be sure that gets filled, you can just come in and adjust the price and then, send it in and, and there we go. We got filled on that. So there's Google. How about we look at Comcast? Now, what sector is it in? Communication sector. How has the communication sector been doing over the last month? It's been leading the pack, so not too shabby. So here's one that, this one kind of got beaten up. This one does pay a dividend. And if we come to the trade tab and we click on this link, this has a price earnings ratio of $8.47. So if somebody's looking for a value stock, they're often looking for something with a price earnings ratio, or they might be looking for something with a PE ratio of under 20. This is under 10. And when we look at it, it also pays a dividend. Now, one of the differences between paper money and a live account is that this doesn't actually get paid to our paper money account like it would be a live account. And just because it pays a dividend now doesn't mean it's going to pay a dividend forever. That can change. And sometimes we've seen that change. And if it changes, that doesn't tend to have a really positive impact, shall we say, on the price. But if this is going sideways, like it's been uptrending for most of the last week after it hit this support level that it's now hit, 3 times. And when it's hit, it tends to hit and linger, hit and linger, hit, and it's kind of moving to the upside. Could we buy 100 shares of stock that would be under 5,000 and put a stop below here, this 31.44? So 31.44 times 0.97. So we're going to put our stop here at $30.49. And then we could put a target up here around this 37.50 mark, because when it came up, where did it go to? 37.60, 37.98, 37.72. What was this one? 37.64. So we could put in a target. And if you were looking to try and generate income, might this help? And you're saying, well, it's not that much. Well, beats a poke in the eye with a sharp stick. Now, it could also not work out. And if we take a loss, how much would that be? Well, if we're in at 34.47 and if our stop we get out at the anticipated price, so how much are we risking? If I subtract 34.48 from this, $398, $398 a share. So we could be down 400, and we could be down more than that if it gapped down. But we've just had earnings. So let's kind of look at this as an opportunity. And so another stock position, where this time we're buying custom with an OCO bracket, and we're putting in a target at 37.50. Now, if it gets up to 37.23 and looks like it's going to roll over, might we, take the money and run? Absolutely. And then our stop was at 30.49. Yeah, so Frankie, I love your math skills. So Frankie is saying, like, for a small account, that's 25% of the account. Shouldn't we allocate only 10% per investment? It depends on your account size. So the reason that we made it 25% was so that we could do things like a buy right covered call, or do an example where we owned 100 shares of something and then maybe wanted to sell a call and do a collar sell a call and then buy a protective put. But, do we have a lot of stock positions? Typically not. But with a smaller account, sometimes, like, we're also taking more risk in that if you're risking $500, that's 2% of this account. So, and, I teach a class on Thursdays called After the Close, where we have $1 million account and our max position size is 5% of the account value. And our max risk per trade is 0.5%. And some might choose to make it even lower. So with a smaller account, this is why it's so important to manage things. And you might not be comfortable with that. You might say, well, I don't want to invest more than 2,000 in any one stock, which would be 10% or 2,500. And you could certainly make that your rule. But so far, this has tended to work for it. I'm going to go over short verticals on Monday. Somebody's asking if we're going to look at our short verticals. We have a whole bunch of those, and we're going to look at those on Monday. Okay. Because I have to balance how much time we spend on kind of one thing versus another. Okay. So some other bullish opportunities, and maybe we'll have to save this for Monday. I was going to do an example of a long call vertical on this one. And do you see this pattern? Like, we're seeing it like everywhere you want to be, right? Where something came down pretty dramatically and then has broken out, pulled back, crossed the river, pulled back to test the ice, and is moving on to the upside, and like up 5% today. And when we look at these, you might say, oh, we've missed it. Really? Like, when it gets back up to 740, are you still going to think that entering here was a bad idea? Now, it may never get back up to 740. It could turn around tomorrow and, start tanking again. But I ask you this, how many people do you know that do not have a Facebook or an Instagram account? I can think of two. My 86-year-old mother is on Facebook. People are maybe not on both, but they tend to be on one or the other. And what is Meta all about? Well, they've got Facebook, Instagram, all kinds, and that's not all of it. Messenger. How many people do you know communicate via Messenger? If you look at the fundamentals, do they look reasonable? And not that this is a fundamental class or that any of this is a guarantee, but, when you just think about not just looking at the chart, but what does this company do and how many people use it and how dramatically do you think that's going to change? So we want to look at things like that. How about Take-Two Interactive? It went through this period of consolidation, kind of a double bottom, or some might say an inverted head and shoulders type pattern. Oops, I can do this. I thought I had my drawing tool going. And then it broke out, and then it kind of came back. There's our little inverted head and shoulders, a little sloppy, but some of us are not totally aligned. But we've got earnings coming up on that. So this came back to this kind of old resistance, new support. So, and when you see this big a drop and it wasn't earnings yet, I asked the question, like, what's going on in the news? What caused that to happen? And we're almost out of time. So we don't have time to look at this today, but, come back Monday, to be continued, like the next chapter. Here's another, similar in that it's breaking out or potentially breaking out of this consolidation period. Cintas, they provide uniforms. ISRG, you see another similar theme here. Some might say diagonal resistance breakout. Some might say inverted head and shoulders. And I'll be posting some of these charts, today on X. And that's kind of some of the stuff that we share with you. So guys, we are out of time today. So what did we do? Well, we talked about the importance of having a plan and then following it. We talked about the importance of having discipline in our trading and treating our trading like a business. We went through a couple of examples that hit targets or exits, and we did a bit of a postmortem on those and looked at our return on investment or how big a loss we took and if we could have avoided some of that. We placed a couple of new example trades. And, one was on Google where we bought stock. The second one was on Comcast, both communication stocks as it would turn out. And so hit the like button if you haven't done that already. It once lets Brett and I know that you found this content valuable, but more importantly, it helps move it up in the YouTube algorithms so more people can find this content. Subscribe to the channel if you haven't done that already. Follow us in the land of Twitter, Barb Armstrong CS and Brett Crowther CS. And get out there and hug someone you love, my friends. It is Friday. I hope you have a really fantastic weekend. More great content coming up that you won't want to miss. So stay tuned for the next webcast. Take care, everyone. Bye for now.